percentage of that goes, let's say, towards Japan or Europe rather than the US to the same extent as before, I think that matters a lot for the performance of equity markets, currencies, bond markets. We are seeing the very first signs of that, and I think there's a lot more to go unless, like in emerging markets, the policymakers change their stance. Really, that's what we're talking about. They need to discipline themselves, or I don't see a way out of this very, very large regime change we're watching.
That's literally what I was going to ask you, Alfonso. Is this inevitable unless we see a policy pivot from the White House? Because there is this argument to be made that corporate America is incredibly strong. It adapts really well, and that means we retain our American exceptionalism because of the strength of the companies here. Is that an argument that is fair at all, Alfonso, or is it policy pivot, or this trend happens and continues?
So there is an argument to be made there in the sense that U.S. corporates actually are amongst the, let's say the U.S. stock market is comprised of corporates that actually make most profits abroad. It's one of the markets where U.S. earnings are generated actually abroad to the largest extent. So a weaker dollar, well, actually helps U.S. companies. So you need to bear that in mind, and you also need to bear in mind that U.S. stock market is still comprised of very, very large and competitive and moat-like companies. So I'm not talking about the US per se. I'm talking about the relative value of foreign currencies, foreign markets versus the US. And well, if you look at the last 15 years, in relative value terms, US stock markets and the dollar have trounced anything around the world. So the reallocation, again, in relative value, not in absolute terms, but in relative value, I think is a lot more to go.
Yeah, a really important distinction. Alfonso, thank you so much for spending your time with us this morning. That is Alfonso Picatiello of Macro Compass. All right, let's get back to one of our top stories this morning. Pope Francis has died at the age of 88 at his residence at the Vatican's Casa Santa Marta. He had been hospitalized in Rome in mid-February with bronchitis, which progressed to pneumonia in both lungs, the last in a litany of respiratory and other medical challenges he had faced. On Sunday, he had met with U.S. Vice President J.D. Vance. Joining us now is Bloomberg's Donato Paolo Mancini from Rome. Donato, great to see you this morning. What is the latest?
Well, good morning. Thank you so much for having me. So as you say, the Pope passed away this morning. The Vatican made a statement about an hour and a half ago saying he passed away at 7:35 this morning. He died in the Vatican. He had been hospitalized for about 5 weeks and was discharged last month after a complicated set of infections, which included bilateral pneumonia. The Pope had been kind of kept away from public engagements, but had returned to some of them. And as you rightly said, he met with U.S. Vice President J.D. Vance yesterday for a very brief private visit. And so tributes are starting to pour in, essentially, for the passing of Francis, who was 88.
Donato, there's some firsts from this Pope. The first Pope from the Americas, a Pope who opted not to don perhaps more flashy outfits or regalia that comes with the pontiff. Just how different was this Pope? What is his lasting legacy going to be?
I think his lasting legacy is one of advocacy, perhaps, for migrants, for those who have less. In general, he was the first Latin American Pope, as you said. And I think his message was one of essentially of sharing, of making sure that everybody could get to the same means and to the same things as everyone else. His defense of migrant rights, of refugee rights, was quite strong. It was quite vocal. He essentially criticized the Trump administration's stance on forced deportations earlier this year in a very not veiled message, which obviously drew a response from the White House in the sense that J.D. Vance praised the Pope and said he would still stand by his policies. But I think he will be a Pope that is remembered for his advocacy. I think that's clear.
Donato, thank you so much for joining us this morning on an Easter Monday. Bloomberg's Donato Paolo Mancini. Again, Pope Francis has died at the age of 88, the spiritual leader of the world's 1.4 billion Catholics. Since March 2013, Francis hailed from Argentina, making him the first Pope from the Americas, as well as the first Jesuit to hold the position.
top names in business are on Bloomberg.
The U.S. has behaved like somebody who has a golden credit card. That's the way we've behaved. And that's the way Washington has spent money. Can the events of the recent days change that? Can they cause there to be a credit limit? Can they cause a bill to be presented at some point in time? If the answer to either or both of those questions is yes, that's a real risk.
Nobody covers business like Bloomberg. Bloomberg has the Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next?
On this episode, the continent has been silent, and people are always looking for new. And new means us bringing our stories to the world, told in a way and manner that is just going to wow you.
Premieres April 25th, only on Bloomberg.
The fact is, the inflation rate is higher, growth is slower, the job market is worse. So I strongly hope that we do not move ourselves into an environment where monetary independence is questioned, because that would undermine the credibility of the Fed.
The conversation, I'm sure, happening at Easter tables around the weekend. Can the White House actually fire Fed Chair Jay Powell? All of this kicked off with a Truth Social post from Trump saying that his termination couldn't come soon enough. This was from Kevin Hassett, the National Economic Council director, on Friday when he was asked by a reporter if removing Powell was an option. He said, quote, "The president and his team will continue to study that," and that the policy of this Federal Reserve was to raise rates the minute President Trump was elected last time, to say that's the supply side tax cuts that were going to be inflationary. That Fed officials opted to go on TV and at IMF meetings and warn about terrible inflation from the obvious runaway spending of Joe Biden. So again, real criticism coming, and that concern. What does it mean if we do have a removal of the Fed chair? Can he even do that? You see weakness coming through in the dollar. It is at its weakest level, the Bloomberg Dollar Index, since January of 2024. The euro at its strongest versus the dollar in even more time than that, since 2021. You can also see the yen strengthening as well, stronger by 1.1% this morning. It is a concern of U.S. exceptionalism, of U.S. dominance. It is sell everything this morning. You also have U.S. futures weaker by more than 1%. By the way, we're about to get into the heavy part of earnings season. How will corporations be coping with this new environment? You also have a U.S. 10-year yield. I just want to be clear, that isn't trading at this moment. Europe is offline for the Easter break. That is the last close as of the Japanese lunch break. But what we have seen is a remarkable curve steepening. You have seen fives, the front end, been pinned, not just by Powell and the expectation of cuts, which, by the way, he threw some cold water on last week. Instead, what you have is, will there be cuts if you have the removal of a Fed chair? So because of that, you've seen the 2s, 30s steeper by 12 basis points in the Tokyo session. Meanwhile, gold is at an all-time high this morning. Gold trading at just under $3,400. Again, we're speaking with Alfonso Pecatiello of Macro Compass, who's saying that we have to reconsider where U.S. assets fall into portfolios. Does gold become the beneficiary? It is the thing that continues to trade higher. You can see NYMEX crude and Brent crude both falling this morning, 2.2%, 2.4%. And we, at the moment, are continuing to see bearishness really reflected in those risks assets, trading at $66 a barrel and $63 a barrel, too. Again, the concern is, and the talk is, at this moment, Fed Chair Jay Powell and the concerns as to whether or not he should be removed. Let's get a check again on where we stand on FX markets. Just as we head to the break, it is a weaker dollar this morning as the euro strengthens. More to come. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO? It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function, it's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is?
Telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good. But as we strive for the great ones, sometimes those really, really good ones have to be left behind.
New episode premieres April 23rd, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
In case you missed it, on Bloomberg Technology.
This is the first event in history where a company CEO invites all of the guests to explain why he was wrong.
We have a vision about how quantum computing will be useful.
We're still at the beginning of a learning curve with respect to how NVIDIA and Jensen interact with quantum computing companies.
Don't miss Bloomberg Technology live every weekday.
It's your Bloomberg Brief. I'm Danny Berger in New York. Let's take a look at what papers have for their front page this morning. First up on the New York Times, leading with Pete Hegseth, sharing attack details in a second signal chat. Sources told the New York Times that the U.S. Defense Secretary sent sensitive information about strikes in Yemen on March 15th. The private group chat included his wife, brother, and personal lawyer. Next up, the FT leading with this, Chinese state-backed funds are cutting off new investments in U.S. PE. The move comes in response to pressure from the Chinese government. Multiple buyout executives said that Chinese investors have changed their approach since the trade war began, adding that they will no longer make new fund commitments to U.S. firms. And on the Bloomberg, Iran says nuclear talks with the U.S. are moving forward after a meeting on Saturday. The Iranian foreign minister saying his country has a better understanding with Washington on a range of principles. Discussions are set to continue in Muscat this week. Oil also retreating not just on that, but fears of the impact of the U.S.-led trade war. Oil down this morning more than 2.4%. Joining us for the latest is Bloomberg Horizon's Middle East and Africa anchor, Jomana Bersecci. Jomana, what is the latest with the Iran-U.S. talks?
Yeah, hey, Danny. So the second round of talks took place this weekend. Also in attendance, similar to the first round, you had the U.S. Special Advisor Steve Witkoff, the Iranian Foreign Minister Abbas Araghchi, and the talks took 3 hours, and they were similar to the first round of talks, also mediated by Oman. You mentioned now in the comments that the Iranian Foreign Ministry did say to their state TV that they walked away with a better understanding of the principles of what the U.S. are looking for. And this is perhaps in reference to what happened last week after the first round of talks. There was a bit of confusion as to what the U.S. side were asking for. Initially, Steve Witkoff suggested that the U.S. would tolerate low levels of nuclear enrichment so long as they were used for civilian purposes. But towards the end of the week, he walked back on those comments. And of course, Iran have said over and over again that the full dismantlement of their own nuclear program would be a non-starter for them. So the fact that these talks are continuing suggests that they do have a better understanding of what both sides are looking to achieve vis-a-vis this nuclear program itself. And actually, the Omani Foreign Ministry put out a statement saying this phase aims to reach a permanent and binding agreement that guarantees Iran's full renunciation of nuclear weapons, the complete lifting of sanctions, because that's a key criterion for Iran, and the safeguarding of its right to develop nuclear energy for peaceful purposes. And it's that last point, Danny, that I think people are going to be really latching onto, because already Iran is sitting at 60% uranium enrichment levels, which is very close to nuclear weapon grade material.
Joanna, thank you so much. That is Bloomberg's Joanna Bersecci. Now back to our top story. As we spoke about earlier, Chicago Fed President Austin Goolsbee warning about central bank independence just days after President Trump expressed his displeasure with Fed Chair Jay Powell. The National Economic Council Director Kevin Hassett saying that the White House is studying if they can remove Powell. Joining us now is Bloomberg's Bill Ferries. Bill, great to see you. Can they remove Fed Chair Jay Powell? It looks like we have lost audio with Bill. Bill, thank you very much for trying to join us again. Just to recap the latest news, we did see Kevin Hassett over the weekend. We'll try to get Bill back if we can. Kevin Hassett on Friday saying that they are studying ways to see if they can remove Fed Chair Jay Powell. Is something that has been a fright for this market, but will it actually happen? We're speaking with Alfonso Pecatiello, who said it was probably unlikely, but there are other fears in this market. Torsten Slok writing over this weekend that there are 90% odds of a recession. He calls it something of a trade-induced recession. The reason, he says, is because of the impact to small businesses, that 80% of the American economy is supported by small businesses. And should you see them deal with unable to get certain commodities in from China, certain trade items, they will go under. And it is something that is concerning. So it is a market that is reflecting both fears of the economy and fears of destabilization. Will we trade more like an emerging market? That is what you're seeing exactly in this picture. That is yields move higher, up by 3.5 basis points. That is a weaker dollar this morning, and S&P 500 futures also down by 1%. To look across equities, you also have tech getting hit even more hard. Those are down 1.3%. We're going to hear from some tech giants. That is Alphabet. They will be reporting earnings on Thursday. We'll get Tesla tomorrow with Dan Ives over at Wedbush warning about code red if Elon Musk doesn't take a step back from Doge and focus on Tesla. Okay, coming up on the show, Satara Sundar, global equity strategist at JP Morgan Private Bank, will be joining us next. This is Bloomberg.
In 2000, post-Napster, generally everybody wrote off the recorded music industry, including the investment community. And I didn't mind that chapter because then I got left alone. And actually, I think out of that period, we started to create better art because the pressure wasn't on from the technology to be the most powerful chapter. And then iTunes came in, and iTunes, to Apple's credit, did have a boutique taste mentality about the store, which meant that I think they understood. I can tell you from that period that the artists that came through were of a very high quality because it was encouraged to be boutique. Now, ironically, this chapter has made us more money times 5 than the iTunes chapter and the post-Napster chapter. But an algorithm tells you what you want, not what you might like. And there's a difference between what you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world. And so that has been very lucrative as a business.
Bloomberg brings you you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
From our global headquarters in New York City, welcome to Bloomberg Brief. I'm Danny Berger. Let's set your agenda. Termination fears. The White House studies whether it can remove Fed Chair Powell. The dollar weakens to new lows of the year. China's warning, don't cut U.S. trade deals at our expense. Meanwhile, Beijing slashes imports of U.S. commodities. And Pope Francis has died this Monday morning in Rome after being hospitalized with bronchitis. The pontiff was 88 years old. Let's get a check on these markets this morning. It is a Sell America narrative that is gathering steam. The euro at its strongest since 2021 versus the greenback. Fears of attacks on the Fed's independence. People familiar saying that hedge funds have been selling the dollar weaker against all of its major currency peers this morning. It goes further than just dollar weakness. It is across assets. It is a stock market, that is also weaker this morning, down by more than 1%. Across futures, it is a little bit more light on the volumes this morning, considering the fact that Europe is off for the Easter holiday. NASDAQ underperforms. We're going to get Google earnings on Thursday. Tesla comes tomorrow. Finally, it is also treasuries that have been weaker. They're on a lunch break until they start trading the cash market at around 7 a.m. this morning. So futures a little bit stronger, but gold is also at another all-time record, while Brent crude is down by 2.5%. A quick look on some individual stock movers. We're keeping an eye on Tesla this morning. Shares are falling in the pre-market. Wedbush Securities analyst Dan Ives warning about a code red if Elon Musk doesn't refocus his attention on Tesla. As I mentioned, they report earnings tomorrow. TSMC shares also falling in the pre-market. Its Arizona subsidiary posted a loss and listed the challenges of ensuring export control compliance by its customers. Netflix, that is gaining in the pre-market trade, up nearly 3%. Post-close on Friday, it reported first quarter profit that exceeded Wall Street forecasts. It is the first time, by the way, Netflix has reported financial results without disclosing how many customers it added or lost. We're going to get even more earnings this week. More than 120 companies are set to report. That includes industry heavyweights like Tesla, Boeing, and Google. Joining us now is Sitara Sundar, global equity strategist at JP Morgan Private Bank. Sitara, thank you so much for joining us this morning.
Thank you so much for having me.
Look, it's going to be a busy week, and already we've seen this spat of downgrades coming, trying to incorporate tariffs in this unknown outlook. Just what are you expecting as you hear from companies? What are you looking out for?
Yeah, I think there's a bifurcation in what we're looking at in terms of 1Q releases and then forward-looking guidance. I think we all need to acknowledge, first, just taking a step back, coming into the first quarter, consensus is coming in at expecting 7% earnings growth. That's a meaningful slowdown from where we were in Q4. And there's a lot that's changed, I think, over the past few weeks. So what we're more focused on is forward-looking guidance, CapEx spending plans, if companies are even going to be putting out guidance given the uncertainty that we're seeing right now. But at the end of the day, I think what we're trying to focus on as equity investors is what we can actually control and what we can actually see in terms of the fundamentals. So we want to make sure that we're seeing growth and meaningful growth out of many of these companies, but we acknowledge that there's a lot of uncertainty. But if uncertainty starts to create volatility in these high-quality names that have been on our watch list, we would be looking to use those pockets of volatility to add to some of those higher quality names that could be selling off on unnecessary weakness.
So a company like United comes out and says, here are our two scenarios. You have a scenario where we do really well or one where we do really poorly. You have basically companies doing different scenario analysis in a way that they hadn't before. What do you do with that? How do you analyze whether this company is attractive when you have two bipolar outcomes for so many of these various companies, airlines, name the sector you want?
Look, it's a great question, and we're all trying to grapple with it. And I think we have to, as investors in this environment, have some humility on what we know and what we don't. But honestly, when we think about investing moving forward, even for us, when we're advising clients on what to do moving forward, we're also looking at the different scenarios that are out there and probability weighting what the most likely outcome is going to be. So when we think about advising advising clients on how to invest their portfolios for the long run. We're talking a lot about portfolio resilience and creating durable portfolios for the long run, because just as these companies are trying to create a durable earnings outlook for their shareholders, we're also trying to do the same thing on the investment front. And the best thing that you can do at this point in time right now is try to find those pockets of opportunity that is just going to shore up your portfolios.
Where are you finding
Right,
this? Yeah.
exactly. So even earlier this morning, we're talking about what's going on with the U.S. and selling assets, and the U.S. maybe trading like an emerging market country, given what we're seeing with currencies and the like. What we're talking a lot about right now is portfolio resilience. So what does that mean? One, on the public side, we're talking a lot about making sure that client portfolios are globally diversified. I think we need to remember where we came into earlier this year. S&P was up over 60% over the past couple of years, all of that, a majority of that driven by the Mag 7. So we acknowledge that a lot of clients had a lot of assets within the U.S. ecosystem, which made sense, but that global diversification was important. And then two, even legging into less correlated assets outside of just the public market. So we're talking a lot about infrastructure as well, which has not just the diversification benefit and the correlation benefit, but also all of these like secular tailwinds when you think about revitalizing U.S. energy infrastructure and the power demand that's going to come from artificial intelligence. We're leaning there too, because in this time of macro uncertainty, we actually like to lean into areas that are a little bit more secular in nature, that we can kind of be above the noise of what's happening on a day-to-day basis.
Just on a very headline level, though, we've seen assets sell off, but this is still an equity market in the U.S. that is trading at, price to earnings multiples of something like 20 times. It is still very richly valued.
Yep.
Does that mean that this rotation into something that looks more normal, something more diversified, something more global has a ways to go?
I think so. I think that there is probably a ways to go in terms of seeing some of the rotation into the areas that are more highly valued and to not. But I also think that it makes sense as an equity investor to be bottoms up. I think that's the biggest thing. If I can give the one tagline, is that maybe the index level, it's going to be a little bit of a tougher ride, but that bottoms up focus is going to be extremely important, because we've seen volatility increase, and for the first time in a while, we've actually seen stock dispersion increase alongside that. We've seen stock dispersion levels, if you look at various indices, they're at the highest level that we've seen, even above that what we saw in COVID. So from our perspective, you got to find those bottoms up opportunities, and even in areas, let's talk about the elephant in the room, which is technology, and what do we do with many of those areas. We still think that artificial intelligence is a secular trend that's going to stay for multiple years. Now, the biggest change for us in terms of what's happened so far this year is shifting from some of those highly valued areas like semiconductors and shifting more into software, because we're shifting in the AI paradigm shift landscape as well, less from the hardware side and more the application side.
There had even been this concern there on a very macro level that perhaps we were entering an environment where U.S. exceptionalism for tech takes a backseat because of the challenges coming from China. Is that enduring at all? Is that a real threat for American tech and the AI trade that has been so dominant?
I think that it's definitely, I don't know that if it's a threat that the leadership in the United States is going to change. We still have really strong companies when you think about the mega cap tech companies too, but I think it brings more people to the table, which I think is important from when you're trying to think about the durability of an equity market rally, whether it's in the United States or whether it's in global markets. You need to see breadth in order for that rally to be durable. So when people ask me that question, which I think is a very fair one, I'm actually happy to see that we're starting to see more entrants into the space, because increased competition is only going to be good for a secular trend, because at the end of the day, you're just getting the best products out there to the consumers at the end of the day. And then as a shareholder, that's just going to boost returns over the long run.
I got to say, one of the best headlines I saw from earnings last week came from Schwab when they reported earnings. And they basically said, our clients are buying the dip, but they're asking for help. This idea that people want to stay fully invested, but the sentiment is very poor. What are you hearing from your clients? Where is sort of the sentiment match with just how invested they want to be in this market?
So honestly, I think we reflect the same sentiment. There's a lot of folks who have had appetite to buy the dip. They've been waiting. We came into the year with clients at very elevated levels of cash because they've been waiting for a pullback, because the markets have pretty much just been going up and to the right within the U.S. So the client appetite is definitely to lean in. However, it's less at the index level and it's a lot more at the bottoms up level, which I know is something that I've said quite a bit, but I think reflective of the fact that not everything, the rising tide may not lift all boats, and the need to be selective is really key, which is why we're here.
Yeah, well, good place to end it with the takeaway, bottoms-up analysis.
We need to do it. It's finally coming to fruition once again.
Love it, Sitara. Thank you so much. Hard work finally paying off. Yes. Sitara Sundar of JP Morgan Private Bank, please come join us again soon. All right, let's get you some other top stories that are trending on the terminal this morning. TSMC says it's facing challenges in ensuring export control compliance by its customers. It cited an incident last year where its chips ended up with Huawei through intermediaries. It said the constraint is hindering its ability to prevent unintended end uses of its chips. Tesla bull Dan Ives warning that the EV maker is facing a, quote, code red moment. Tesla will report first quarter earnings tomorrow. Ives said that CEO Elon Musk should focus on Tesla and step back from his work at the Department of Government Efficiency, which has caused brand damage to the company. U.S. Vice President J.D. Vance has arrived in New Delhi, where he will be holding a bilateral meeting with Prime Minister Narendra Modi. The trip comes as the U.S. is threatening to increase the 10% tariff on Indian exports to 26% if no deal is reached by the end of President Trump's 90-day pause. This is Bloomberg.
Is this a negotiation or the new rules of the game?
It could be either.
It is up to the president how he wants to negotiate.
The higher the tariff, the faster they come.
A 90-day pause is not an eradication.
The trade negotiations are moving quickly. There will be deals cut.
Trust Bloomberg for all the context and clarity you need as the tariff and global economy story evolves.
This year's bear case, very quickly, becoming the base case.
Nobody covers tariffs like Bloomberg. Context changes everything.
Women tend to marry 2 years older. They tend to outlive men by 5 years. And so the first passing of money tends to go with the baby boomers from the patriarch to the matriarch. Women are making more money. And the third thing is more are managing the money for their household. And so you're seeing women much more in the driver's seat now versus maybe what we would have seen 5-10 years ago. And, we're adapting to that.
The next generation is much more interested in pre-IPO opportunities, whereas our generation thought about the IPO as where you get an entry point. And I think they're also a bit weary of volatility. And so I think this massive wealth transfer is going to further broaden the private markets. And I think the next generation is going to be all about those opportunities.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily. Every business day at 2 p.m. Eastern, only on Bloomberg.
The fact is, the inflation rate is higher, growth is slower, the job market is worse. So I strongly hope that we do not move ourselves into an environment where monetary independence is questioned, because that would undermine the credibility of the Fed.
Chicago Fed President Austin Goolsbee there stressing the importance of monetary independence after President Trump truth-socialed that Powell's termination couldn't come soon enough, followed by Kevin Hassett, the National Economic Council director, saying that the White House was studying whether or not they could remove Powell. Joining us now is Bloomberg's Tyler Kendall in Washington, D.C. Tyler, can they remove Fed Chair Powell?
Yeah, hey, Danny. So that's one of the biggest questions here. Jerome Powell himself says that he doesn't think President Trump has the legal authority to fire him and that he wouldn't step aside if he did. And right now there is legal precedent on the book that should theoretically protect him. He's protected under the Federal Reserve Act of 1913 from being fired without cause. But there are questions here about potentially just removing him completely or, say, removing him from the chairmanship. This White House already has multiple legal battles brewing here that could extend beyond the Federal Reserve, but to other independent regulators that would then have an impact on the Federal Reserve. One of them is that the administration is asking the courts to review the legal precedent known as Humphrey's executor that applies beyond the Fed to other independent regulators to protect them from being fired for political reasons. There's a case right now that's brewing. It's expected to be decided by the Supreme Court that's looking into one other independent regulator from the National Labor Relations Board who says he's been fired without cause. This administration is really pushing the judicial branch to side with them, saying that precedent has often overstepped the executive branch's authority to place who they want to help establish their own policy goals. So really some big questions there as this administration pushes that they would like Jerome Powell to cut interest rates to help offset the incoming tariff policies. And you mentioned Kevin Hassett. That was potentially one of the most important comments that we got on Friday, suggesting that this White House is already well underway into the process, looking into potential ways to remove him.
Meanwhile, the clock is ticking down on getting trade deals. At least that was quiet over the weekend, Tyler. And I wonder if it's a concern that progress was quiet over the weekend. Japan saying that they won't keep conceding to U.S. demands. South Korea's president saying that tariff negotiations with the U.S. won't be easy. Tyler, Japan was supposed to be one of the first trade deals done. What does it mean we got through the weekend and we didn't hear anything?
Right. Well, one of the first to get deals done because this White House said that they appreciated that Japan had reached out early and directly to President Trump. President Trump last week, we know, said that he was directly involved in those talks, which was considered to be highly unusual considering that the talks weren't at that leadership level. Now, while we didn't get progress necessarily when it comes to updates from the White House, President Trump was still posting on Truth Social all weekend about exactly what he wants when it comes to a deal. And he really honed in on those non-tariff barriers that we often hear, like lax IP protections, regulations, other sorts of standards. Actually, in one of his posts specifically calling out Japan when it comes to car standards for U.S. imports into the country. So clear that President Trump himself, tariffs were on his mind as he was trying to push forward or move ahead these trade talks. Now, our reporting does indicate that while Japan did have these tough words about not giving forth too many concessions when it does come to trade negotiations, local media is reporting that they actually are considering potentially laxing some of those standards when it comes to U.S. car imports, as well as upping soybean and rice imports into the country. So potentially we could see some movement there. But it is important to keep in mind that those countries that did get priority were those countries that, one, reached out, but also were geographically close to China, Japan, South Korea, Vietnam, countries that we know that Xi Jinping last week on his Southeast Asia tour were also trying to target to shore up his own support. And Danny, I would just quickly add that there was also news over the weekend, China responding pretty harshly to reports that this administration is looking for other countries to up their own tariff barriers, their own non-tariff barriers too, in a bid to counter China as a potential exchange here when it comes to negotiations with the U.S. China saying that any countries that do that potentially impose a so-called secondary tariff, as one example, would face their own counter retaliatory measures from Beijing.
Tyler, thank you so much. That is Bloomberg's Tyler Kendall. And let's stay on that story. What Tyler was speaking of China warning, do not make deals with the U.S. that could harm Beijing. Joining us now is Bloomberg's Bill Ferries in the region. Bill, we heard a little bit from Tyler there, but what exactly is China warning to trading partners of what not to do?
Well, they're concerned, as Tyler was mentioning there, that as all these countries are beginning their negotiations with the U.S. over those so-called reciprocal tariffs, that the U.S. administration is pushing for some very non-tariff related components to be a part of those deals. So it could include things like having countries put tariffs on other trading partners who are allowing Chinese goods to flow into their countries, kind of, as supply chains have been been rerouted. So third country goods coming into the U.S., that's something that the U.S. is taking a look at, saying maybe you should restrict that kind of trade. And China really trying to pitch itself as a more stable partner. The reality is, for many countries, China and the U.S. are their two biggest trading partners. They don't want to do without one of them. They really can't afford to lose both of them, but they're stuck in the middle here. And China's saying, listen, we're not the ones putting on tariffs, then revoking tariffs, and then putting on other conditions. We're the ones who are trying to keep stable policy. We are a more stable partner. So that's the pitch Xi Jinping is making to countries around the world. He made it very up close and personal in his tour of Southeast Asia last week, and I think it's something we'll continue to hear them talking about.
Can we also look at, Bill, what China is doing beyond increased tariffs as this continues when it comes to commodities? I know there's also an FT story about China no longer investing in American private equity funds. What routes is China taking to continue to pressure America?
Well, we've seen them already raise tariffs or export restrictions on some critical minerals that the U.S. uses in everything from its technology industry to the defense industry and jets, things like the F-35 jet. They're talking to other countries. I said they're lobbying for them not to give up too much. And they're really trying to push forward this message that they are now the guardians of the global trade order of open trade and free trade, and it's the U.S. that is becoming much more of a protectionist and unstable partner.
Bill, thank you so much for your excellent reporting this morning. That is Bloomberg's Bill Ferries. Let's get to one of our other top stories this morning. Pope Francis has died at the age of 88 at his residence in the Vatican's Casa Santa Marta. He had been hospitalized in Rome in mid-February with bronchitis, which progressed to pneumonia in both lungs, the last in a litany of respiratory and other medical challenges he had faced. On Sunday, he had met with U.S. Vice President J.D. Vance. Joining us now for more on this is Bloomberg's Tommaso Ebthart in Milan. Tommaso, Pope Francis is different in many regards. The first pope from the Americas, the first Jesuit, donned a more simple wardrobe. Just what legacy is Pope Francis leaving behind?
Hello, good morning from Italy, which woke up today with the news at 7:35 a.m. was announced that Pope Francis has passed away. He's leaving a legacy of simplicity. This is somehow how he would like to be sort of remembered. And this kind of style of his papacy we saw until the end. He had been hospitalized in February for almost 5 weeks for pneumonia. He didn't hide somehow his health situation. Then he went back to the Vatican. He was portrayed in the last few weeks attending some events in Vatican in an armchair. He was critical ill for a while, and he didn't hide sort of himself. And until yesterday, when you said he met with the U.S. Vice President J.D. Vance and also made a very short speech on Easter Sunday on the Vatican Square. And so until the end, he wanted to be, one of the people. He didn't leave his papacy. He didn't spend much of his time in the Vatican. He always wanted to go away outside and meet the Catholics all over the globe, and especially in Rome.
Yeah, earning that nickname, the People's Pope. Tommaso, thank you so much for helping us remember Pope Francis. Bloomberg's Tommaso Ebthart. Again, Pope Francis has died at the age of 88 years old, the spiritual leader of the world's 1.4 billion Catholics since March 2013. Francis hailed from Argentina, as we said, making him the first pope from the Americas and the first Jesuit to hold the position.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. The Spanish bank BBVA has gained worldwide respect for its efficiency and commitment to innovation. CFO Luisa Gomez Bravo welcomes the challenge of keeping her company on the cutting edge.
In the world that is changing so fast, having a finance function that adapts quickly is crucial.
Watch Chief Future Officer Wednesday on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bringing you up-to-the-minute French news whenever and wherever it happens. I'm Caroline Conan in Cannes, and this is Bloomberg.
Let's get you set up for your trading day on this Monday morning. The IMF World Bank spring meetings, those will begin today. And then throughout the week, Tesla will be kicking off Mag 7 earnings on Tuesday. Alphabet, it reports on Thursday. We'll also get US PMI data out on Wednesday, along with new home sales. Let's look at some of the stocks on the move. Tesla lower. Dan Ives of Wedbush warning of a code red moment for the first quarter ahead of its earnings. By the way, CATL also unveiling a 5-minute charger for EVs. Next, TSMC, that's down more than 1.5%. Warning of challenges of ensuring export control compliance with the trade war ramping up. And finally, Netflix reported earnings after the bell on Thursday, extending those gains up 3%, showing a lot of resilience despite that tougher macro environment. Now, the macro environment this morning is one of sell dollar versus everything else. Against all of its major peers, the dollar is lower this morning with both fears of the economy and Fed independence. All right, that is it for your Bloomberg Brief. Surveillance takes the reins from here. This is Bloomberg.
We'll have to see over the next 3, 6, 9 months how the tariff discussions play out and what does it mean.
I do factor in some effects of tariffs now on inflation, on prices.
I like the idea of the 10% tariff across the board.
I've spent my entire career focused on fiscal discipline. I don't think these people have the foggiest notion what they're doing. And I think DOGE is doing tremendous damage to government.
Elon Musk is
probably the inventor of our age, but who understands that we're in the midst of the most profound convergence among technologies.
When we are facing a once-in-a-generation technological disruption,
we cannot close this retirement gap without private-public partnership. We have to have good policy.
Do you think, Dawn, that the market is correct to be, as of now, pricing in 3 rate cuts in 2025?
I would take the other side of that bet.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
The economy's in a pretty precarious place, but we're starting from a really strong base.
We need to be ready for some chaos along the way.
If we're in it for the long haul, then we have to accept the fact there will be implications to the economy.
We regard it as 45% chance for a recession in the US over this next year. And that's because of all this volatility and all this uncertainty.
This is a really highly uncertain time. This is an uncertain journey to an uncertain destination.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your trading week started. Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Monday with Fed independence under siege.
On Jerome Powell, you said that the termination of Jerome Powell cannot come fast enough. He says he won't leave it even if you ask him to.
Oh, he'll leave. If I ask him to, he'll be out of there. He's too late, always too late, a little slow. And I'm not happy with him. If I want him out, he'll be out of there real fast, believe me.
President Trump putting the pressure on Fed Chair Jay Powell and his economic advisors on pushing back.
And the obvious runaway spending from Joe Biden was textbook inflationary, and we didn't see anybody warning about that. And then they cut rates right ahead of the election. And so if you think that it's unacceptable for President Trump to be frustrated with the policy history of the Fed, then I think that you got to, like, some explaining to do.
So, is removing Powell an option? The president's top economist saying the president and his team will continue to study that. The public feud is hitting the US dollar weaker against every single G10 currency so far this morning, reinforcing the message from the Treasury Secretary, who has reportedly cautioned that firing Powell would destabilize markets. And according to the New York Times, the president is, for the moment at least, persuaded by that argument. The key words there, for the moment.
And that's the reason why people are trying to get ahead of that and maybe diversify away from dollar assets. You're seeing this pretty much across the board. Here's the key question. You can make whatever argument you want. Is this president willing to roil markets at a time where the likes of Chicago Fed President Austin Goolsbee over the weekend came out and said that countries that lost their Fed independence, their central bank independence, were challenged by a higher inflation rate, slower growth, and a worse job market?
This feels like a fluid conversation within the White House right now. It was just a week ago when I sat down with the Treasury Secretary Scott Bessent, and he said to me that monetary policy is a jewel box that needs to be preserved. Then, just 5 days later, we hear from Kevin Hassett saying that this remains an option, basically keeping the door open to conversations that are going on behind the scene, and him saying that they're looking at the legal avenues available to this president.
There's another Kevin in the mix here. Some fantastic reporting over the weekend. The Wall Street Journal indicating that even Powell's possible replacement, the former Fed Governor Kevin Walsh, has advised the president against firing Fed Chair Jay Powell. So the pushback coming from all corners.
And it even is coming from some Republican Congress members who went on the shows over the weekend to say this is probably not the greatest idea. Look, there needs to be at least a perception of Fed independence. And what happened to Scott Bessent's discussion with you, saying that, yeah, they're going to start interviewing later this year. They're not even thinking about it at a time when it seems like they're meeting every week to have lunch. I mean, come on, how much can they really hit each other?
Exactly, breakfast. And Bessent said last week it was an away game. He was at the Fed. This week he's going to be at Treasury because they meet every week for breakfast. I imagine
imagine this week is going to be a very interesting breakfast between Jay Powell and Scott Bessent. I was also struck by Kevin Hassett. In 2021, he wrote about in his book that the Fed independence needs to be preserved. The impact it could have on financial markets, the dollar, would be very terrible, according to Kevin Hassett in 2021. Now he's saying maybe his thinking has changed.
We'll see if breakfast gets cancelled. Equity futures on the S&P 500 negative here by 1 full percentage point. Coming up this hour, we'll catch up with Marvin Lowe of State Street following the S&P 500's 7th down week in 9. Terry Haynes of Pangea Policy on why Chair Powell's not going anywhere. And Jeremy Jansen on Wells Fargo on the impact of tariffs on supply chains. We begin this out with rising concerns over the Federal Reserve's independence. Marvin Lowe of State Street writing, it's reasonable that stocks can remain in a range for the moment. Incoming information will guide us if we need another leg down from a valuation perspective. Marvin joins us now for more. Marvin, we have some incoming information. Threats to Federal Reserve independence. What would happen if the president fired the chairman of the Federal Reserve?
I mean, ultimately, we're already starting to see the tremors of that discussion make its way through the market. Every day, it seems there are more and more reasons to really pare back, if you will, what's been an overweight position across U.S. assets. This just adds to another one of those walls of worry. I think longer term, one of the keys to the U.S. financial market is the independence of the Fed and their ability to operate the way they see the world's biggest economy needs to operate. And you really are on very shaky ground if you go down that route.
Marvin, we're discussing the optics of all of this. The legal constraints are another issue. And then the operational independence. If you look at the Federal Reserve, away from just the Federal Reserve chair, it takes more than just one man to make a move of that institution. Do you have any confidence in that at all?
You know what? I do. I mean, the Federal Reserve Act is a wonderful structure, one that was based on the fact that the country didn't really trust a broad monetary authority through a specific administration. The 2-year periods, the fact that the chair has to come from the existing board, I think all of those are brilliant approaches to it. But in going down this route, in terms of trying to replace the chair, the administration is looking to break down all of those really long-standing held strengths that have kept that institution isolated from the administration.
Mr. Market certainly has been having a bit of a difficult time recently, and seems like the anxiety levels are very high. And this morning, maybe they're accentuated by the fact that it's pretty thin liquidity. How much can you get a sense of what's noise from markets in terms of the magnitude of a shift away from U.S. assets, and what's actual signal about how much large asset allocation away from the United States is actually going on?
Yeah, Lisa, I mean, it is very, very hard. And, you know, the analyst community, myself included, we're always trying to curve fit and get an explanation of what some of these moves are doing. I do think that when we kind of look at how valuations have stabilized within a very, very volatile range over the course of the last week, it kind of shows that there was an adjustment period associated with it. But one of the takeaways that I have is around the dollar discussion that you led the hour off with. It is around how Treasury yields are responding to this. And these are the purest forms of expression of the U.S. economy. And, you know, I'm not comfortable just saying that we should ignore that because there's an adjustment associated with it going on.
And if you just look at the technicals, and the Treasury market hasn't yet opened because a lot of people are on vacation. We're not. But I know that London is on vacation and some other places as well for the Easter holiday. There is this question about that yield curve steepening and whether we could see that steepness at the highest levels going back to 2022 persist and extend. At what point would you come in and fade that versus just lean in and suggest that this is the path ahead?
So one of the things that I've been, really, I guess, on a soapbox to a certain degree, and I've discussed it on your program, is the term premium that's kind of associated with the market, how much additional compensation one needs to go out the curve. I've targeted in the past somewhere in the range of 90 basis points, upwards of 120 basis points of term premium, kind of based on certain measurements. We're at about 60, 65 basis points at this point, which is also a multi-year high. So I do think that there's a bit more pain. I've talked about a 5% 10-year for a while, and that still seems like, a thing to keep in one's mind, depending on how all of this evolves.
Marvin, however this evolves, the discussion is already out there, and it's going to be hard to put that genie back in the bottle. Is the discussion itself damaging enough for financial markets?
It certainly is. We do need calmer heads to prevail within this discussion. And again, I'm reading the news that ultimately you folks are putting out there. It does seem that there are a lot of different voices within the administration that have a fairly significant seat at the table, which have opposing views, and we really need to get a sense of which one of those are louder and are guiding policy, whether it's around monetary policy, whether it's around the trade discussions, whether it's around deficit funding. All of that does come down, in my mind, into how the 10-year reacts to this. So yeah, it's hard to put it back, but not all of the damage is completely irreversible at this point.
NEC Director Kevin Hassett, though, when he was asked about this and asked about his 2021 book, which he seems to be making a bit of a U-turn, he said, I think at that time the market was in a completely different place. Was the market in a different place that now would be acceptable to fire the Fed chair as opposed as it wasn't in Trump 1.0?
Yeah, thank you for that information, because actually I hadn't heard that before this morning. So that's a great data point. A weakening of the dollar is one of the discussions that has emerged in terms of one of the goals of the administration. So certainly, potentially somehow threading that reserve currency with a weaker dollar without giving up the ghost on the treasury market, in my mind, is still something that we as investors have to watch in terms of a potential goal of the administration, because the treasury market is at the center point of those, if you will, ideological approaches to how one would want to reorder global finance and global trade.
Hey, Marvin, appreciate your time and your input this morning. Thanks for catching up with us. Marvin Lowe there of State Street. If you're just joining us, some real dollar weakness across G10. A new low for the US dollar, new high for the euro dollar 115.44. There is clearly some operational and institutional resilience of the Federal Reserve that we should probably talk about on a morning like this morning. But front and center, just the slow decay of US assets over the years so far. The context here is really important. It's the timing of this conversation that counts. Only a few weeks ago, we were talking about the erosion of the safe haven status of U.S. assets, and I think that weighs on that even more.
It just builds the narrative that already had been in place, and what you can see right now is diversification away from dollar-denominated assets. Japanese super long bonds just had their biggest inflow ever from foreign investors last month. You're seeing even emerging market bonds do better in local currencies than the U.S. dollar.
Dollar weaker, equities sliding. We're down 1% on the S&P 500. With an update on stories elsewhere, let's get your Bloomberg brief with Danny Berger. Hey, Danny.
Hi, John. We begin with breaking news from earlier in the morning. Pope Francis has died at the age of 88. According to a statement from the Vatican, Francis passed away at 7:35 a.m. in Rome. He had been the spiritual leader of the world's nearly 1.5 billion Catholics since March of 2013. Francis hailed from Argentina, making him the first pope from the Americas, as well as the first Jesuit to hold the position. Elsewhere, the Trump administration considering a sweeping proposal that would reshape the State Department. The document says the changes to be made by October would eliminate dozens of positions and departments, including those dealing with climate, refugees, democracy, and Africa. In a post on X, Secretary of State Marco Rubio called the report fake news. And Tesla's planned rollout of its cheaper cars, including a lower-cost Model Y, has been delayed by at least 3 months. Reuters didn't cite a reason for the delay. Tesla is due to report earnings tomorrow. Investors looking for guidance on how it intends to turn around its shrinking market share. And that's your brief, John.
Hey, Danny, thank you. Appreciate it. More from Danny later on this hour. Up next on the program, the Fed's credibility.
The only thing that's gone up, actually, is interest rates, because we have a Federal Reserve Chairman that is playing politics. If I want him out, he'll be out of there real fast, believe me.
That conversation up next with Terry Haynes of Pangea Policy, live from New York City this morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
In case you missed it, on Bloomberg Open Interest.
Finding some sense in these crazy markets.
I hope they turn around, though. You know, because my 401k, I'm looking at my 401, my retirement, and I'm thinking, God, how many more decades do I have to work?
Your retirement account. I cannot say that enough. Set it and
You need
forget
to find a new target date.
I need to find maybe a new future. I'll be standing next to Paul Sweeney as a greeter at Walmart, you know, in our 70s.
Don't miss Open Interest live weekdays.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Coming off the back of a weekly loss on the S&P 500, and the losses resume following the long weekend. Equity futures down by 1% on the S&P, and the Nasdaq 100 down by 1.1. In foreign exchange, more dollar weakness. DXY the year so far, negative 9.5% and down 1 full percentage point on the session. Under surveillance this morning, the Fed's credibility.
The only thing that's gone up actually is interest rates, because we have a Federal Reserve Chairman that is playing politics, somebody that I've never been very fond of, actually. But he's playing politics. Interest rates should be down now. If I want him out, he'll be out of there real fast, believe me.
So here's the latest this morning. Dollar weakness gaining momentum following President Trump's threats to fire Fed Chair Jay Powell. Joining us now from the nation's capital, Bloomberg's Tyler Kendall. Tyler, the pressure keeps building.
Yeah, hey, John, good morning. Particularly after NEC Chair Kevin Hassett on Friday suggested that the White House is seriously looking into potential pathways to remove Powell, saying that they will continue to study the issue. Now, Jerome Powell himself says he doesn't think President Trump has the legal authority to fire him and that he wouldn't step aside if asked to. And in theory, he's supposed to be shielded from being fired without cause by the Federal Reserve Act of 1913. But we're already starting to hear questions swirl about whether or not that would apply to removing him completely or potentially just removing him from the chairmanship. We should say there's a few legal battles brewing that we are watching very closely for their impacts here when it comes to any potential removals, including that this administration is asking the courts to weigh in on a legal precedent known as Humphrey's executor, which should shield federal independent regulators and agencies from being fired for political reasons. Now, that doesn't deal directly with the Federal Reserve, but is expected to potentially impact any future moves here. There's one case that is very likely to be decided by the Supreme Court. We don't have the exact timeline yet, but has to deal with a recent firing from a National Labor Relations Board member that could give us some clues into what this administration is looking for here when it comes to a legal pathway forward. John, we should say that ultimately we still don't have exact clarity on what President Trump meant when he said that the termination couldn't come fast enough, but you heard him double down on his criticism in the Oval Office as he tries to say that lower interest rates would offset his tariff policies.
Well, when it comes to his term ending, Tyler, we do know it's going to be May of next year. So who's on the short list right now that the president, the Treasury Secretary, is thinking about potentially to fill that role?
Right. Well, we should get more clarity later this fall, as Treasury Secretary Scott Bessent told you that's when that process is really starting to pick up here. We know that some other potential names that have been floated, including former Fed Governor Kevin Walsh, is on the short list, as well as we try to glean more information from the administration on exactly what they would like to see. There's already been some other positions that President Trump has floated some potential replacement for, including that Michelle Bowman is now up to be a Fed Vice Chair of Supervision after we saw her predecessor, Michael Barr, step down amid speculation that he would likely be removed or asked to be removed under this Trump administration. No doubt, though, it will take a Senate confirmation for whoever is confirmed, but with both chambers being controlled by Republicans, it's very likely that that will happen.
Tyler, appreciate the update. Tyler Kendall of Bloomberg down in Washington, D.C. Always interesting that Kevin Walsh's name is in the mix all the time when he's widely regarded as a hawk on Wall Street, but yet is still in the mix every single time this conversation comes up.
If you're trying to find economic logic behind this, good luck. And when you do figure it out, you can let us all know. Nonetheless, loyalty, I think, is number one. And the perception of loyalty seems to be front and center. A key question, though, what is the process going to look like, given the fact that Jerome Powell, if you remember, was a Trump nominee. So this is going to be a very difficult path ahead, both in understanding who would be selected, and what their policies would be.
To extend the conversation, Terry Haynes of Pangea Policy joins us now for more. Terry, welcome to the programme. A lot of bark here. How strong is the potential bite?
I think not that strong, John. Thanks. My summary of this really comes down to about three things. One is that Trump is trying to pass the buck to Powell for whatever market problems exist. Markets aren't going to bite on that, of course. They're very fixed on Trump. Secondly, you got a situation where, as you've been reporting, the Wall Street community is already reacting this time to the possibility of Powell's removal in a way that they haven't before. So that's a real concern. And finally, as Lisa mentioned earlier, you had the folks in Congress on the Sunday shows all basically providing a little bit of subtle pushback. So there's, I think there's at least three reasons why the bark is worse than the bite.
Terry, I'd love to get your thoughts, though, on what Kevin Hassett said, the NEC director, when he said that they're studying that option. He basically left the door open.
Well, I think he should, right? He's a lot of things, but fundamentally he's a staffer, and if he publicly dissents from whatever the president's doing, he's going to be out of there pretty quickly. So, I look at that as a matter of staff loyalty and not much else. They've been studying this since 2018 or 2019, by the way, so I welcome their continued study.
I want to get your thoughts, what I also asked Marvin Lowe, the fact that we're having this discussion out loud, the fact that the president didn't make clear what he said last week, which talking about his termination, is that enough to do damage?
To damage to Trump or to Powell?
To Trump, to the position, as well as to financial markets.
I think it doesn't help financial markets. I certainly don't think it helps the president. I mean, you can parse the statement that you all have been running in the bumpers, and if I want him out of there, he'll be out of there. Well, he's not out of there, and you don't like his policies, so so he's staying. So you must like his policies. So there's that kind of circularity. And number one, and number two, the last thing that Trump needs right now is Wall Street fleeing on him when he's in the middle of the tariff fight, firstly, and secondly, when tax cuts, which are still very, very likely at 80%, haven't come online yet.
It feels like President Trump is playing good cop, bad cop with markets right now. Bad cop, I don't know about Jerome Powell. Good cop, let's make a deal. All of a sudden, all of these deals potentially are on the table with Japan, with EU, and that's the upside that people are looking for. What if this actually leads to some sort of resolution? How much do you expect that to really take the brunt of oxygen this week?
Well, I think this week the White House would be smart to continue to bring out the prospect of deals being done, and I think they were reasonably effective at that the last couple of weeks, and that's all to the good. The better it is for what's best for the White House and what's best for the markets at this point are really the same thing, which are to see progress being made on the tariff deals and to clarify what I always think of as kind of the descent ascendant role here, which is that these things are supposed to be path dependent, and if we do deals, tariff barriers and ex-tariff barriers come down for the United States and for others, benefiting markets. That's all good. By the time you get to next week, what you're going to see is more progress being made on tax cuts, with the idea of a third quarter, fourth quarter deal, and hopefully that helps them get through this patch.
Terry, should and will are two very different things, and it seems like you believe that markets do have some sort of, I don't want to say veto power, but certainly weight in the president's mind. What gives you that concrete sense, given the fact that there have been a number of occasions where President Trump has come out and pushed back against caring whatsoever about the move in the markets?
I think it's really this. I was one of the first, maybe the first, to say that I didn't think Trump cared about markets on tariffs with respect to imposing them. Tariffs, in my view, have always been part of a much broader economic plan that includes tax cuts and some other things. They've been, I think, very clear about that. But at the same time, it is not in the president's political interest at all to have markets go seriously wobbly on him at a time where he's trying to impose a lot of those things. So I think that market pressure actually really helps define the situation a little bit better politically as well as economically.
Terry, you keep mentioning tax cuts. The market is pricing in an extension of TCJA. What cuts are you talking about?
No, I'm talking about the extension of the 2017 cuts, and then you're going to see a bunch of tweaks to that, not just the taxes on tips thing that the president keeps talking about and other things. But I think you're also going to see a restructuring to really favor increased U.S. manufacturing and including reshoring, among other things.
Terry, appreciate your input as always, sir. Thanks for catching up with us this morning. Terry Haynes there of Pangea Policy. Neil Dutter of Renmark making the point several times over the last several months that the tax bill, in the way that he expects, is just removing a potential headwind as opposed to providing a potential tailwind.
Right, because basically what everyone is pricing in is current policy, an extension of Trump's first term, cutting of the taxes. That extension is basically the votes they have for right now. Maybe one other sweetener. Everyone talks about no tax on tips. The Treasury Secretary thinks that it's the most underreported story in Washington, D.C., and they're going to get all these extras. The problem is, how do you do that already when the market is starting to push back on some of your other policies like tariffs, as well as this potential Fed independence question?
If you are just joining us, welcome to the program. Let's talk about that Fed independence question. Equity futures down and down hard, off by 1 percentage point on the S&P 500. And if you check out foreign exchange this morning against G10, Lisa, weaker against absolutely everything.
You don't want to hear your country named with Turkey when talking about the potential for central bank independence. And really, there's just one economist after another coming out and saying it tends to lead to higher inflation, a really devalued currency, and then potentially weaker growth. You know, Anne-Marie brought up a really interesting point. How much, I don't want to say by design, but the idea of a weaker dollar actually benefiting some of the reshoring efforts. Is this part of the policy objective, at least up front, to try to bring some activity home? I don't want to say this is 3D, 4D, 5D chess. I'm just saying that is one question people are postulating this morning.
It's a pretty messy way of achieving that outcome, isn't it?
Very messy. It's also the reason why people rejected the idea of torpedoing the economy. And, you know, this is sort of the discussion, though, that people are trying to understand and wrap their heads around.
The DXY is negative this morning by 1 full percentage point. The conversation will continue. Coming up in just a moment, Neela Richardson of ADP looking ahead to the week ahead with lots of economic data and earnings as well. Equity futures near session lows. We're down 1% from New York City this morning. Good morning to you all. You're watching Bloomberg TV.
case you missed it, on Bloomberg Crypto.
We believed in crypto for a very long time. We believed in DeFi. When you look at DeFi and the power of that, I mean, it's really restoring the power back to the people. There's nothing that DeFi, there's nothing that cryptocurrency on blockchain can't do better, cheaper, you know, in every way, faster, more transparently than the financial system that we have right now. There's not a Friday that goes by where I'm not chasing a swift wire transfer, hoping it comes in on, you know, before the 4 p.m. deadline, or trying to send one out. You know, you could transfer millions and millions and millions of dollars worth of Bitcoin overseas, you know, while having a glass of wine with your wife at 11 o'clock at night. That's a beautiful thing. Our financial system in this country is antiquated. Our financial system in this country has been punitive to so many different people. And so we're reinventing the financial system. I'm all in, personally. I really, truly believe in this with every part of my heart and soul.
Don't miss Bloomberg Crypto, live Tuesdays.
The top names in business are on Bloomberg.
The U.S. has behaved like somebody who has a golden credit card. That's the way we've behaved. And that's the way Washington has spent money. Can the events of the recent days change that? Can they cause there to be a credit limit? Can they cause a bill to be presented at some point in time? If the answer to either or both of those questions is yes, that's a real risk.
Nobody covers business like Bloomberg.
Equities soft ahead, down across the board. On the S&P 500, negative by 1%. On the Nasdaq, down by 1.2%. On the Russell, small caps are negative by 0.9%. 3 hours away from the cash open. Let's get you some morning movers this morning. Let's cross over to Danny Berger. Hey, Danny.
Hey, John. It's going to be a heavy week of earnings. Something like a third of the S&P reporting a buy market weight. Tesla, one of those companies, reports tomorrow, and the sell-side analysts coming out for it ahead of that. Shares down nearly 4%. Dan Ives of Wedbush warning of a code red as he has for some time if Elon Musk doesn't refocus his attention to Tesla. Barclays also cutting their price estimates and adding insult to injury. Reuters out with a story this morning that their lower cost Model Y will be delayed, the launch of that, by at least 3 months. Meanwhile, we have some earnings to catch up on from last week, Netflix being one of them, reporting Thursday after the market closed a record profit, those shares up 3 1/3%. Not only that, but the CEO saying, we've looked at the macro condition, we've looked at customers, and we're not seeing any change. Investors are hungry right now for a company that seems to be impact-free of tariffs, so flooding to that stock. Meanwhile, rounding things out with some M&A. You wanted a more loose regulatory environment allowing for deals. Here you go. We finally got that. Capital One getting the nod from the regulators to go ahead and acquire Discovery Financial, would make one of the largest credit card providers. Those shares are up 5%. There was some concern that the DOJ might last minute try to block it with the concerns of competition, but regulators over there saying that there wasn't enough evidence to do so. John.
Danny, thank you. More from Danny a little bit later. Some bankers in this nation, at least, hoping that's just the start for 2025. Danny, thank you. On our radar this morning, Chicago Fed President Austin Goolsbee warning against efforts to curb the central bank's independence.
There's virtual unanimity among economists that monetary independence from political interference, that the Fed or any central bank be able to do the job that it needs to do, is really important. I strongly hope that we do not move ourselves into an environment where monetary independence is questioned, because that would undermine the credibility of the Fed.
It's certainly been questioned over the weekend.
And it's really been explained by Kevin Hassett when he came out and said that they are studying it and looking at previous potential political decisions that this Fed chair made. Remember, the Fed chair was nominated by President Trump during his first term. A real question here about how much any decision by Fed members and any utterance by them will be questioned as political, even if they're not, right? I mean, how much this type of rhetoric really puts a tinge on all actions coming out of the FOMC.
The Supreme Court's going to be really important here, and the Fed chair actually said that they're monitoring this case closely, even though they think they're insulated from the Supreme Court decision. This was Trump that fired officials at the FTC and some other independent agencies. That is going to be heard at the Supreme Court, and that should put this, help put some of this to rest. The issue is, of course, the executive branch, the way Donald Trump sees sees is he thinks he should have power over these agencies. And depending on how the Supreme Court comes out and rules, this could potentially be a massive fight between the Fed and President Donald Trump.
Playing out quite clearly in the equity market right now. Equity futures down across the board. On the S&P, we're down 1%. And in foreign exchange, just weighing on the US dollar, that's where you're seeing it in foreign exchange. The dollar's down against everything. To see the euro back up to 115. Only a few weeks ago, we were talking about parity. Wasn't that long ago at all.
People are looking at diversification, and whether this is truly the U.S. is a loss of some sort of golden reserve currency status, the narrative can get ahead of the actual moves. Nonetheless, there is clear diversification, particularly from countries that might be looking at less trade with the United States.
Let's talk about the trade story. TSMC warning of the limits of its ability to keep its AI chips from China. The company writing in its annual report that its role in the supply chain, quote, inherently limits its visibility and information available to it regarding the use of its final products. We're getting a read on what's happening to the data, what's happening to trade. The data out of South Korea showing how President Trump's tariffs could dent shipments of export-reliant economies. South Korean exports falling 5.2% from a year earlier in the first 20 days of April, with shipments to the United States down 14.3%.
Yeah, and down to China just 3%. So you can see where the trade fissures really are. This comes at a time when there's not only concern about potential export restrictions, what happens to the ships that are coming into the harbor if they're going to suddenly get tariffed, how that works. It also has to do with just less demand, right, domestically and elsewhere. I just want to point this out. After Smoot-Hawley was passed, in those 5 years, international trade declined by 66% from the 5 years from 1929 to 1934.
What's interesting about the data, too, if you look more into it, auto exports, those really dropped. And guess what? We still have a 25% tariff on autos coming to the United States. But the Trump administration so far has not put the walls up on semiconductors. Those shipments actually increase. So you can see actually where the tariffs are hitting when it comes to Korea's export. Also interesting, South Korea, their trade delegation will be in town this week. So those conversations will be happening. A key question that they're starting to mull about in these South Korean officials is whether or not Trump himself will appear as he did with the Japanese negotiators.
That's a meeting to watch a little bit later this week. They're the stories on our market radar. Away from the markets, this is the top story worldwide this morning. The Vatican has announced the death of Pope Francis at the age of 88. He was known as the People's Pope for advocating for the poor and those fleeing war and hunger. Joining us now from Rome is Bloomberg's Flavia Rotondi. Flavia, welcome to the program. Easter Monday turning to a day of mourning for Catholics worldwide. Walk us through what happened early this morning and what happens next in Rome.
Good morning, Jonathan. Yes, it's been shocking news, I must say, for all over the world, particularly here in Rome, as you can imagine, as the Jubilee is absolutely ongoing, and many tourists flocking just to, to go to the churches, to see St. Peter's Squares. Hearing this news in the morning has been really an incredible shock all over the world, and it's still hard to believe, to be honest, given the fact that just, yesterday, the Pope was meeting with the Deputy U.S. President Vance here in Rome. It was it's been a very, very short meeting, as you know, a very short conversation, an exchange of gifts, but has been seen as a sign of a kind of, recovery for the Pope that has been also attending a lot of meetings, selecting a lot of celebrations in the last few weeks. Immediately after leaving the hospital, he just rested for a few days and then was out there meeting with, with other cardinals, having all over other engagements. So everyone was kind of hoping that this could be a sign that, it was kind of back on track. The whole thing was kind of back on track. And now, of course, the shocking news this morning. And as you know, now what's next? Well, of course, there will be the funeral and the conclave process that is supposed to start in 20 days before the death or the resignation, as was last time, of the Pope. The whole process hasn't started yet, of course. This is not the right time, but I'm sure that it will be in the next few days, a few technicalities to be resolved, and then the whole thing will actually start. So we can imagine that probably we are looking at a possible date for the conclave. I would say probably the first or second week of May, Jonathan.
Flavia, that will be the time to talk about the future. Let's reflect on the past. From Pope Benedict to Pope Francis, can you walk us through the change in leadership we witnessed in the Vatican?
Yes, absolutely. Quite a legacy for Pope Francis, seen as more liberal than his predecessor regarding a lot of topics, issues from abortion to immigration to, of course, civil rights has been quite the the paladin of all people around, all people all over the world, all the minorities, all the fragile members of the society. So, of course, the question is, what's next? What's next? Shall we have a pope that is basically as liberal as him, or we'll have someone that is more traditionalist, so back to the more strict interpretation of the doctrine? This is quite a big question, and we probably discuss it in the next few days. Yes.
Flavia, appreciate your time this morning from Rome. Flavia Rotondi, Bloomberg's very own. Flavia, thank you. The sad news of the Pope's passing, Pope Francis dead at 88. We'll turn back to markets now, where investors are awaiting a slew of economic data this week. Nita Richardson of ADP writing, in a week full of backward-looking company earnings reports, data on big-ticket items like housing and durable goods provide a peek into the near-term growth outlook of the economy. Nita joins us now for more. Nita, good morning. It's good to see you. A lot of this data flattered by the pull forward that we're seeing from consumers. When do we start to get a clean read on some of the damage that's been done?
I don't think it'll be this week. I think we're still looking at a Main Street economy that hasn't yet felt the dent of anything that markets are talking about. So we're going to get this week, we're going to get some housing reports. Housing is really important, not just because it's the most optimistic thing you can do on the planet, economically speaking, which is to buy a house and take out a 30-year mortgage at these prices. You're saying I'm guaranteed income for at least 3 decades, but also because housing is an indicator that is consistent with the economy going into and out of recession. So what I think you'll see today and this week is strong new home sales, strong existing home sales, and pretty good durable goods sales, which all point back to a pretty resilient consumer economy.
At this point, can you say, or at what point can we say, that the soft data and the hard data have diverged meaningfully in a concrete way, and they're not going to converge in any kind of material way? That people can feel really bad, especially when they answer online surveys, but still go out and spend, but still have a job.
There is a huge time lag right now that we're all confronted with in this time of uncertainty, a time when we intellectually can process what's going on, but our spending behavior, our production behavior, our manufacturing behavior has not changed. And maybe this is a time when there is some circularity, that the real economy is so solid, it changes our sentiment. You haven't seen that yet? But it could happen because what we're seeing in the data, when you look at the labor market, initial jobless claims, housing, durable goods from last month, you're seeing a sense of resilience. You're seeing actually some dry powder sitting on the sidelines. When it comes to even small business formation, those numbers are still strong. People are starting new businesses at record highs still. And that is consistent with a strong Main Street economy, despite the level of elevated uncertainty.
Is there any sign that we're going to see a stop to that, given the fact that banks had a really positive outlook during earnings season and talked about how a lot of those mergers and acquisitions and other deals were just delayed but not put off entirely?
You know, again, timing matters here. How long is the delay? Because we thought that kind of financial activity would have happened months ago, and it has yet to pick up. So there's no certainty here, and I think the financial markets are really ruling the mergers and acquisitions activity right now. Not so true with the homeowner trying to buy a house. I mean, you're led by the baby crying in your 2-bedroom apartment more than you are on mortgage rates right now. And that is what's driving consumers, what they're seeing on the street, what they're seeing on that ground. But why it's important is consumer spending is what drives this economy longer term.
When it comes to consumer spending, though, a lot of this is likely stockpiling. My sister this weekend, I saw her. She's going out and getting a new car. She actually showed me the gifts she bought for Christmas because she's worried about price hikes that are coming down. Do you expect a softness on the back half of the year?
That is the biggest concern. I think you've really hit the nail there because, you know, toy manufacturing, a lot of these goods come from other countries. They come from China. This is the last place that a consumer wants to see the tariff hit when they are buying toys for their kids. So it could be that pull forward. The same with durable goods. You know, I checked my email. My car dealership is, you know, advertising tariff-free cars, which I thought was an interesting sales opportunity there. But yes, that is showing up. Definitely it showed up in the trade volumes we saw earlier this year. So timing is everything in this economy, and we're still not seeing the timing work out between the policy and the behavior.
Everything Anne-Marie just said, we saw in retail sales. It was there in the data.
And so now the question is, how long is that going to last? And to that point that you both were making, at what point does that lead to weakness? How organized are people? Christmas gifts?
I really hope my nephews aren't watching. If they are, the Legos are hidden underneath the steps.
90% of ornaments come from China into this country.
Oh, yeah.
So
they would take the price tag off.
if you want to decorate the Christmas tree, anyway, there you go. Neela, thank you. It's good to see you.
Good to see you.
Neela Richardson there of ADP. Could just reuse the decorations, of course.
I was just going to say, I mean, don't you have the same
perfect sense.
decorations that you put in storage and you take them out every year, right after Thanksgiving? Make sure.
You do things on trend. Okay, it's too early to talk about this. Months away. Let's give you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. We begin with the breaking news out of the Vatican, which announced the death of Pope Francis at the age of 88. He assumed the papacy in 2013 and became known as the People's Pope for advocating for the poor and for those fleeing war and hunger. On Sunday, he had met with U.S. Vice President J.D. Vance. Elsewhere, U.S. Defense Secretary Pete Hegseth is said to have shared confidential military details in a chat on third-party app Signal for a second time. The New York Times reporting that Hegseth created and sent sensitive information to a group that included his wife, brother, and personal lawyer about strikes in Yemen in March. Meta's Mark Zuckerberg and JP Morgan CEO Jamie Dimon were among the top insider sellers ahead of President Trump's sweeping tariff announcements. Zuckerberg sold over 1 million shares of Meta that amounted to $730 million in the first 2 months of the year. Dimon sold over $230 million worth of his company's stock. And that's your brief, John.
Not bad timing. Not bad timing. Danny, thank you. Up next on the program, tariffs trigger panic buying.
Consumers are actually starting to feel the tariff impact now, trying to pull forward some purchases, but the weakness will come, once we see the other actual effects.
Jeremy Jansen of Wells Fargo joins us next, live from New York City. You're watching Bloomberg TV.
You missed it on the opening trade.
The president is speaking to this part of our population that we know did not benefit from globalization. The IMF has been talking about those left behind for decades, and we haven't really seen anything to speak to that part of the population. That's who President Trump is speaking to. But we in Europe, we're seeing the same thing. We're just a few years behind. That part of the population who were left behind are voting, they're speaking. And this is going to unpick a lot of the fabric of the economy that we have seen for the last 20 years. So for me as an investor, it's really thinking about, right, if we had 20 years of globalization that created winners and losers, who were they? And if this is going into reverse, maybe maybe the past losers will be the winners, and maybe the past winners will be the losers.
Don't miss the opening trade, live every weekday.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next?
On this episode, the continent has been silent, and people are always looking for new. And new means us bringing our stories to the world, told in a way and manner that is just going to wow you.
Premieres April 25th, only on Bloomberg.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Equities here negative across the board. We're down 1% on the S&P. We're down by 1.1 on the Nasdaq. The Towns in the FX market. The dollar getting absolutely hammered. New lows for the dollar for 2025. We're down by 1%. The dollar is weaker against everything in G10. Kevin Hassett, the National Economic Council Director, the top economist to the President of the United States, asked about whether they could remove the Fed chair, Jay Powell, and the response was basically, we're looking at that.
We're studying it, and as we heard from Terry Haynes, they've been studying it for a while, so keep on studying, and maybe it won't have any consequence. Nonetheless, he didn't push back, and he had an opportunity to, even with understanding what the market was doing in response to this suggestion.
As they study that, euro-dollar climbs 115.27. Under surveillance this morning, tariffs trigger panic buying.
Consumers are actually starting to feel the tariff impact now. I think you could see much more of this, in the data ahead. Until consumers start to see that, they won't, they're not exactly changing their behaviors yet. They're trying to pull forward some purchases, but the weakness will come, once we see the other actual effects.
So here's the latest this morning. Consumers pulling spending forward as inflation expectations soar to multi-decade highs. Jeremy Jansen of Wells Fargo writing, the supply chain overall logistically remains very healthy. U.S. trade policy is expected to remain dynamic for quite some time. That is a diplomatic way of putting it, Jeremy. Welcome to the program. You oversee supply chain finance, so help us understand what you see across companies right now, how they're managing things from Mexico to Canada to China and elsewhere.
Yeah, hey, good morning. Thank you for having me. Our data here at Wells Fargo does suggest that Chinese imports into the U.S. or us purchasing receivables from those suppliers, it has seen an increase in Q1 of this year versus prior year. We did not see a similar increase when we look at other countries in our portfolio.
How much, Jeremy, do you see this pull forward as